Hey there, fellow petrol heads and concerned citizens. Today we're diving deep into the wild world of petrol prices in Nigeria. Buckle up because it's going to be a bumpy ride. Petrol, the lifeblood of Nigeria's economy, has a history of dizzying price swings. When the cost of this liquid gold goes up, it's like the entire nation is hitting the brakes. Inflation soars, transportation costs skyrocket, and businesses feel the pinch. But when prices drop, it's party time. Consumers rejoice, businesses breathe a sigh of relief, and the economy seems to hum along like a well-oiled engine. So as you can see, petrol prices are a big deal in Nigeria. They influence everything from the price of bread to the profitability of major industries. Stay tuned as we unpack the reasons behind the recent dip in petrol prices and explore its potential impact on Africa's largest economy. Hold on to your hats, folks, because petrol prices are taking a nosedive. But before we pop the champagne, let's figure out what's driving this downward trend. One major factor is the global oil market. You see, Nigeria, despite being Africa's largest oil producer, imports a significant chunk of its refined petrol. So, when global oil prices go down, like they have been recently, the cost of importing petrol also decreases. Another reason for the price drop is the government's decision to partially deregulate the downstream petroleum sector. This means that market forces now play a bigger role in determining petrol prices, rather than the government setting a fixed price. Now this deregulation thing is a double-edged sword. On the one hand, it can lead to lower prices when global oil prices are favorable. But on the other hand, it also exposes consumers to potential price volatility when global oil prices surge. So, while we enjoy the current dip in petrol prices, it's essential to remember that these fluctuations are part of a larger global game. Now you might be wondering, if Nigeria produces so much oil, why is it importing petrol in the first place? Well, that's a great question. The answer lies in Nigeria's struggling refineries. Despite sitting on vast oil reserves, the country's 4 state-owned refineries are operating far below capacity due to years of neglect and mismanagement. This heavy reliance on imported petrol makes Nigeria vulnerable to global price shocks and puts a strain on the country's foreign exchange reserves. The recent drop in petrol prices, while good news for consumers, has cast a shadow of uncertainty over Nigeria's local refineries. With cheaper imported petrol flooding the market, these struggling refineries face an even tougher battle to compete. This situation could lead to job losses in the refining sector and further hinder the government's efforts to revitalize domestic petrol production. Section 4. Winners and Losers. The impact on everyday Nigerians and businesses. The drop in petrol prices is a welcome relief for many Nigerians, especially those who rely on their vehicles for their daily commute or businesses. Lower fuel costs translate to more money in people's pockets, which can be spent on other essential goods and services. Businesses, particularly those in the transportation and manufacturing sectors, also stand to benefit from reduced operating costs. This could lead to increased productivity, lower prices for consumers, and a much-needed boost to economic growth. However, it's not all sunshine and rainbows. The drop in petrol prices could have some negative consequences, particularly for those working in the local refining sector, as we discussed earlier. Moreover, there's a risk that the government might reduce its investment in renewable energy sources and energy efficiency measures if petrol remains relatively cheap. Section 5. Looking ahead, what does the future hold for petrol prices and the economy? Predicting the future of petrol prices is like trying to predict the weather in a hurricane. It's a wild guess. Global oil markets are notoriously volatile, influenced by factors ranging from geopolitical tensions to technological advancements. While the current trend points towards lower prices, this could change quickly due to unforeseen circumstances. The Nigerian government's policies will also play a crucial role in shaping the future of petrol prices and their impact on the economy. Will they continue with the partial deregulation of the downstream petroleum sector? Will they invest in upgrading the country's dilapidated refineries? The answers to these questions will determine whether Nigeria can fully capitalize on its oil wealth or remain at the mercy of global price swings. The government's role steering the economy through fuel price fluctuations. Petrol prices are a big deal in Nigeria. They can make or break the economy. Smart policies are crucial to manage these fluctuations. Protecting consumers and creating a stable environment is key. Investing in alternative energy sources is essential. This reduces dependence on petrol and boosts resilience. Fixing refineries is also critical. Imagine refining our own petrol. It would reduce imports and create jobs. Petrol prices will continue to dominate national conversations. What are your thoughts on the recent drop in petrol prices? How do you think it will impact your life and the Nigerian economy? Share your thoughts in the comments section below. Let's get the conversation flowing.